my dear students. So today we start with the topic cash flow statement. So what do you mean by a cash flow statement? A cash flow statement is something that records all of your cash or cash equivalents. So one specific thing that you have to know is when we say cash flow, the statement will only include your cash items or your cash equivalents. There will be nothing of credit or something that is non-cash items will not be included in our cash flow statement. So let us just begin the format. So first today we are doing the operating activities. We have 3 sections in the cash flow statement, and the first segment is the operating activities. Operating activities will consist of all of your day-to-day operations, okay, not any sale or purchase, but your day-to-day operations that take place in your business. So the first part is your cash flow from operating activities, that is the first section of the cash flow statement. Then in that statement, our first item is net profit as per profit or loss. So what do you mean by net profit, and from where do we get net profit? Usually where do we find net profit? Net profit is found in the profit and loss as a final item in the net profit and loss account. So we take that item and we put it in this column. As you see, the amounts are put there, okay, and then to that you add all these items: transfer to reserve, proposed dividend for the year, interim dividend. All these things are added, and those items we will put in the inner column, okay, and we take the total of that and put it in the outer column, and then we take the grand total. So the add items. Now comes the less items. The less items are extraordinary items, if any, refund of tax credited. Again, those are kept in the inner column when we take the total to the outer column. Then we get the first result, that is net profit before tax and extraordinary items. Then, okay, so that is the total that you get there. Then we have our adjustment for cash and non-operating items. Okay, so what are these non-cash and non-operating items? In the cash flow statement, we take only the cash items, and in the operation we take only operating items. So all those which do not include, which are non-cash and non-operating, we need to add back or deduct it back. Now, what are the items we add and what are the items we deduct? Okay, so far what is our total? It is net profit. So basically this is still our net profit that we get before our taxation and extraordinary items. So in the profit and loss account, all those items or all those non-cash items that you have deducted to arrive at your net profit, what do you do there? You add it back, and all those items that you have added to come to your net profit, you will minus it. Net profit before our non-cash items were added or deducted. Okay, so we are trying to reverse the effect. All the items that were minus to get the net profit, we will add it back. Okay. So the first item under that is depreciation. Okay, depreciation in the profit and loss account, it is usually deducted from our gross profit. Depreciation is deducted to arrive at net profit. So what do? We add it back. Same is the case with all of these items. Preliminary expenses, discount on issue, interest on borrowings, loss on sale, all these items are usually deducted in the profit and loss account, but as they are non-cash items, in our cash flow statement we add it back to get the actual net profit. So we saw the added. Now we have the less items. So these were the items that were added in your profit and loss account to arrive at the net profit. So here we minus it because they are non-cash items. So it is interest income received, dividend income received, rental income received, profit on sale of fixed assets. All these things are non-cash or they are non-operating items. Now if you see interest income, dividend income, they are definitely cash items, but they are not operating items. They are usually the income from your investments and your shares and all. So they are not operating items. So we remove those also out. We take only non-cash, we remove non-cash and non-operating items out, and we take only cash and operating items in our operating activities. Okay. Next, we move on to operating profit before working capital changes. So this is the answer that we get from our working so far. So the profit on sale, we put all this in the inner column, we take the total and put it in the outer column, and then that is the grand total there, and we will get profit before working capital changes, that is this. Okay, so that is the grand total. Then we have our add items, decrease in current assets and increase in current liabilities. So we add decrease in current assets and increase in current liabilities, and we deduct increase in current assets and decrease in current liability. You can by heart this as, you know, increase decrease in current assets is and increase in current liabilities add, and increase in current assets, decrease in current liabilities less. But more, if you want the logic behind it, why do we add decrease in current assets and why do we add increase in current liabilities? It is because what do you mean by decrease in current assets? If your current assets are decreasing, that means that you have turned them into cash, or you have made use of your current assets, thereby your cash has increased. So you have used your current assets to make cash. And increase in current liabilities means what? You have not paid your current liabilities, which also means that you still have cash in hand. Okay, only from cash flow point of view this is applicable. Definitely we will never say current liabilities is good, but from cash flow point of view, if current liabilities have increased, it means that you have made less payments or you have paid less current liabilities, therefore you have more cash in hand, and that is the reason we add. And decrease in current assets means you have made use of the current assets to earn cash, and hence you have more cash in your hand, again that is why we add. And we less increase in current assets. If your current assets are seen to have increased, it means what? You have not made use of your current assets, you have not turned your current assets into cash, and that is why we less, because we have less cash in hand. And a decrease in current liabilities also we minus. Why? A decrease in current liabilities means you have paid off more liabilities. That means there is less cash in hand. In as per cash flow statement, we will have less cash, and that is why we deduct it. Okay, if I give an example, suppose our receivables have decreased. It's a current assets. Receivables is a current assets. So if our receivables have decreased, what does that mean? That means that you have received money, or your receivables have decreased means some of your debtors have paid money, thereby your receivables have decreased. So that is a decrease in current assets. That means you have received cash, that is why we add it. Okay, and an example for increase in current liabilities would be payables. Suppose payables have increased. What does that mean? You haven't paid your payables, so that means you have more cash in hand. Your cash have not gone out in the payment of payables or your creditors. Okay, put those items in the outer column. Okay, and we get the total in the outer column. We have to put individual items in the inner column, and then we go to I'll show you when we work out the questions. Okay, and then that total is cash generated from operations. So till now this is the amount till here. It is all the money that we have generated from our operations. Okay, because working capital is our current assets and our current liability, and that is what we do for our operations. So we get the answer for working cash generated from operations. Next, we minus income tax paid. Okay, and what do? We minus if we paid any income tax, and you will get cash flow from operating activity before extraordinary items, and if there is any adjusted extraordinary items, add or deduct, the same should be done, and then you will get your finally net cash from operating activities, and with that we come to the end of operating activities. So with all these items we will get all the cash that we have received or paid in our operations. Okay, so if it is a positive or a negative figure accordingly. Okay, next we will move on to a question. In this question we see the net income reported in the income statement was 1,10,000. Okay, you might have a small doubt because in the format I told net profit. Okay, that is at the end of the profit and loss account. This is only the income statement, they are giving you the net income. So you can take it in the place of net profit. Okay, so I'll show you where that net profit will be taken. And depreciation on fixed assets for the year was 44,000. So you know what we do with depreciation, and these are the balance of current assets and current liabilities. So let's move on to the answer. Okay, so we see the answer now. So first we take cash flow from operating activities. Okay, that is the heading that you have to write, cash flow from operating activities, and then you have your net income. This is your inner column and this is your outer column. Okay, so we write that amount in the outer column. Then we have adjustment for non-cash and non-operating items. We don't have those items in between of add and minus. I told it's rarely used, but if it is there, you need to do. Proposed dividend, interim dividend might come. So just by heart those items that are there in between. Now we move on directly to adjustment for cash, non-cash and non-operating items, and we saw there was depreciation of 44,000. So what do we do for depreciation? It is deducted in the profit and loss statement. Therefore here we add it, and we see because there is only one item, we directly put it into the outer column and we take the total operating profit before working capital changes. We directly take the total of those two. Okay, that is 1,54,000. Next we have our working capital changes. Our current assets, we will do our add and decrease. First we will take current assets, okay, and we take the add items. We will go in. We have cash, debtors, inventories, prepaid expenses, accounts payable. Out of this, cash we will not be taking. Why? Because cash we will take towards the end of the statement, which I will be teaching you at that time. We will take debtors. So debtors are current assets. How do we look? We have to look what was the asset at the beginning of the year and what was the asset at the end of the year. So in the beginning it was 1,80,000 and now it is 2,00,000. That means current assets have increased. An increase in current assets, it's add or deduct. We definitely increase in current assets means we minus. Why? Because we have not turned our current assets into cash. Therefore, we have less cash with us. Therefore, we minus or we less it. Okay. Then what do we have? Inventories. Our inventories were 3,00,000. It has reduced to 2,90,000. So our current assets have decreased. So this is a minus, this is a plus. Here itself if you do, you can just directly take it and put it into your statement. Then we have prepaid expenses. What are prepaid expenses? Prepaid expenses are again current assets. Okay, they are expenses that you have paid beforehand, before the actual time has come. So prepaid expenses have decreased, which means you will add it again. Then you have your liability, which is accounts payable. Accounts payable has decreased, current liabilities decreases. Add or minus? It is current liabilities decrease means what? You have paid it off, that means less cash, therefore we minus. Our current assets, what are the assets we will add? Our decrease in inventory, our inventories have decreased, our current asset has decreased, therefore we add it. Then our current asset has again, prepaid expenses have decreased, again we add it. And in the deduct side we have debtors, means what? Our current assets have increased, therefore we deduct it, and our current liabilities have decreased, therefore we deduct it. Hence we come, we have to write those in the inner column and write their totals in the outer column. And after this, this is the, you add that, you get 1,65,000. From 1,65,000 reduce 34,000, you will come to 1,31,000, which is your net cash flow from operating activities, and hence you will come to the final answer of net cash flow from operating activities. So basically this is the question that we are doing today. I hope you understood this question. Thank you.